In this video, we're going to talk about what is the on-balance volume OBV indicator. Stay tuned. Hey traders, a very warm welcome to. So I've got this chart up in front of me now, which is US Steel code X on a daily chart. And I've got this indicator called the OBV indicator. Now, OBV stands for on balance volume, and I've flicked it over to a white line just so we can see what's going on. And I'm kind of minimized the price a little bit, but bear with me, I'm going to bring it back in a second just for explanation. So, on balance volume basically is almost a summary of volume in an uptrend against a downtrend. Let me explain that with the calculation. So, if the market closes higher than the prior day's close, the volume on that is added to the indicator. If the next day we have an up day again, so I'm going to define that as an up day, the volume on that up day is then added to that indicator value. Same again, if we have an up day, it's added. Every up day, the volume is added to this indicator, so it's just summing the volume. If we have a down day, in other words, the close is lower than the prior day's close, that volume is then taken away from the current indicator value. I hope that makes sense. So in other words, just think of it as, it's trying to give us a kind of a figure that's telling us, hey, you know what, we're in an uptrend and the volume is flowing in. So if you can imagine, a choppy environment where you had 2 days up, 100,000 volume, that will give you 200,000, and then 1 day down, 100,000 volume again on the day, that would take you back to 100,000 because it'd be 200,000 minus 100,000. So you can kind of see already in your mind how this may or may not work. Now, the important thing with this OBV is it's not really about the absolute value. The number is irrelevant because it's going to be, because it's just based on whatever, it could be a contract size, it could be, stock. A stock could be very, very active. The point is, it's the difference of how the volume is affecting up days and down days. And if you're getting a lot more volume on up days, like you tend to get on breakouts, if you're breaking out of a level, you're going to get a lot more volume coming in, and the continuation, that's going to really give the OBV a shove to the upside. And let's say you had 5 down days, but they were very, very low volume, it was not a lot happening. It's not going to pull the OBV indicator down too much, so it's still going to be at the high level, even though the price may well have come down. So it's kind of an interesting tool, and it's one that takes into account volume as opposed to price, even though it looks obviously the change, whether it's an up day or a down day, doesn't necessarily look at the range or the big, the extension of the move or anything like that. It's purely a case of volume. So obviously you've got to have decent volume feed, and you've got to have something that's got accurate volume to make this work. But let's have a look at something like US Steel as an example. So as you can see, we've got these crazy numbers here, which is why the actual absolute value isn't really important. But how can we use it for trading? Number one thing is, we want to use it to confirm kind of things that we're already seeing. So in other words, we've got this gap up on US Steel. We gap up and we have good volume coming through. We have a bit of a down day there, but this is now pushing the indicator up to give us an idea that yes, confirmation, volume is flowing in on up days. Because what you don't want, guys, is up day, and then more volume coming in on the down days. Because although for every buyer, every seller, there's a buyer and they're matched, generally we can kind of roughly say that ultimately volume comes in when the trend is strong and the direction is strong. You have a brutal downtrend day, you get a lot of volume coming in to confirm that. So we want to see volume coming in to confirm the direction of the move. So here we go on US Steel, for example, we get the gap up and the continuation. OBV pushes up with it, continues to push to highs. Now another way we can use it is to look for a divergence. So in this same example, let's just minimize that. We had a high and unwinding, but unwinding, the volume didn't really come down so much. Even on the down days, we didn't have that much volume, so it didn't do too much damage to it. And it makes sense as well because it's very similar to price. It's going to match price to a certain degree as well, obviously, just based on the fact that if you have 25 up days and 25 down days and the price comes back to where it was, you're probably going to get equal enough volume. But anyway, the point is you've got a diversion option here. So as price goes to a new high here on US Steel, you don't get a new high in the OBV. In other words, there doesn't necessarily seem to be that much participation in this move. Maybe not so much keen, not so much interest, not so many buyers stepping up and considering it as value, and then we roll over and start to come back down. and vice versa. You can see how you get extreme moves in OBV. This is obviously a down day here, big volume, but look how much that's changed the OBV. So it's really kind of significant to see exactly how it relates to price. So two ways of using it, guys. Confirmation, so if you've got a breakout and you say, okay, and in fact, let's have a look at something like US dollar JPY. Appreciate the volume's not potentially as good as it could be when we're using currencies, but it's not too bad. But let's say we're using this here and we're saying, okay, we're broken out of here for whatever reason. Let's see, the OBV then starts to kind of break out as well, which is showing us, okay, good, here we're starting to push up. OBV starting to push up too, pushing to highs. Very nice. We can use that as a kind of confirmation indicator that says, yeah, you know what, we're pushing out and volume's coming in. Volume is greater on the up days than it is on the down days. And I'm going to stick with the trend until something gives me an indicator or a sign to come out at the end of the trade or whatever reason. So that's number one. The other one is obviously divergence. If we haven't got the volume coming in at highs that we had the last time went to highs, might be a little alarm bell that says, okay, people aren't so keen. Maybe this thing's going to relax a little bit, as opposed to like a genuine trend which will break through to highs. Loads of volume will be coming in, and we're just off into the stratosphere. So that's OBV, guys. Interesting little tool to use with your trading. Let me know your thoughts and comments below if you use it. If you don't use it, how you think you could perhaps implement it into your trading or not. And as always, good trading, guys. See you in the next one. Take care. Bye bye.